recording going. I like recording these sessions. All right, so again, this is the live chat for August 2nd, 2019, Management 824, Strategic Planning and Organizational Alignment. And that's an important connection between those two related processes. One at the top level, where we're sorting out strategic vision and choosing a certain path towards the future from among real choices, and then making decisions on which ones to adopt as a result of our analysis of the environment and our internal strengths and weaknesses, the opportunities and threats, and so on. So the strategic planning element of this is really a process of enlightenment, illumination, analysis, and then a choice to proceed in a particular way for reasons that should be supported by evidence and which can be supported by mental models or concepts or theories of action that come from the literature and come from experience and from the hearts and minds of our people. So all of those things go into how you make the decision on which way to proceed. So that's sort of the end of strategic planning and the beginning of the organizational alignment. So organizational alignment, the second part, is where we're thinking about how to structure the organization, how to adopt certain processes, how to resource those processes, how to establish the policies, procedures, the culture that defines the human environment of how we're going to proceed, how we're going to put that strategy into motion. So those insights, the how to implement, how to organizationally align, should be part of your strategic planning, because that should be seen either as a leverage. You have a particular edge that's embodied in the knowledge and practices of your people, or it's a constraint in which you look at the capacity of your people to transform and you say, hey, this might be an ideal way to organize, but I can't get there right now without unacceptable levels of risk, and so I may have to take an interim posture to see how that goes, to see if I can begin the transformation towards what is my ultimate or my final state. So the role of theory and experience in evaluating and then implementing an organizational alignment approach or a transition plan is a key component of the environmental considerations you put into the strategic plan itself. So it's important to look at those things as a continuity. I was reviewing some transformational literature this week that talked about the unity of both theory and discipline, in the sense, discipline being the practice. If you look at Buddhist literature, for example, the Buddha describes the Four Noble Truths as the doctrinal approach, the theory of Buddhism about the nature of pain and suffering in the world, the source of it, where it comes from, what you can do about it, and then a way to get beyond that to live a deeper, more meaningful life. Well, if that's the theory embodied in the Four Noble Truths, then the discipline is the Noble Eightfold Path, in which the Buddha describes 8 different aspects of proper thinking, intentions, speaking, actions, behaviors, in order to achieve the reality that is described in the theory of the Four Noble Truths. And it so happens that the last of the Four Noble Truths says that the way to get out of that cycle of pain and suffering is to adopt the Eightfold Path. And then the first step in the Eightfold Path is the right awareness, which understands the nature of the Four Noble Truths. So in the very construction of those two mental models, the Four Noble Truths and the Eightfold Path, the Buddhist literature creates that unity between theory and practice, between ideas, concepts, and the actions that follow to implement. So in a secular world or a business world, we can think about that relationship between theory and practice being an artificial divide that some people say, well, I just want to talk about the theory, and sometimes I just want to talk about the practice. Or if you are from one of those two camps, you may discount or disregard or ignore or undervalue the other side. So if I'm a practitioner with 30 years of experience in the shop, I may not have the ability to listen to the new kid from college who's coming in and talking about his textbook theories, because I may have disregarded or undervalued the theory. Conversely, a theoretician who comes from the ivory tower of academia that doesn't know the territory, that doesn't know how to listen to the voices of experience that understand the environmental conditions, may not realize the limitations of their own theory. They may bite off more than they can chew. And so there is a constant effort in the world of practice, especially in the professions, to find that harmonious linkage between theory and practice, between strategic planning and organizational alignment. And there's a whole cottage industry out there, guys like the Cotter Change Model or the Lean Six Sigma movements, that talk about how to find that useful interface between, or that unity between, theory and practice. So as we start getting into Unit 3 and beyond, I'm looking to incorporate more of that sensibility into your discussion board insights. So when the questions ask you to consider a new model or a new concept, like Porter's 5 Forces, for example, or the theory of vertical integration, we want to not only get the textbook definitions, but we want to get some sense of how it works in the world, or how it could be applied, or how it could support improved operations in the world of daily practice. So that's what I want to kind of take a look at here first, with 4 different scenarios in modern strategy making and organizational alignment that were in the headlines just this very week. So the very first one is a decision that Apple has made to buy the modern G5 chip making business from Intel. So Intel's in the chip making business. They want to concentrate on certain lines of business, and they're looking to divest themselves of the G5 chips that go into cell phones. They want to get out of that business altogether. And Apple, because the iPhone is central to their ongoing cash flow, has made a business decision to expand into the manufacturing side directly by buying that business and looking to compete against Samsung, Sony, and Taiwan Semi and all the chip makers out there. So that's a real decision that they have to make, that they didn't have to make, but there's a choice they did make. And then they're going to have to figure out how they're going to need to modify their top level businesses to account for this new, completely new line of operation they're doing. How do we get the experts who know the chip making business integrated into the Apple leadership? Are they going to treat it as a separate line of business for accounting purposes? Are they going to try to incorporate Apple culture? Is that significantly different than the Intel culture? How are they going to bridge that gap? And how are they going to develop their people long term? Do they need to start thinking about growing executives who are familiar with Apple's traditional lines of business as well as the new hardware manufacturing business? Are they going to bring in designers, or are they going to be looking to export or outsource the design and then just keep the manufacturing? Was this just an effort to ensure that there was a protected source of supply? Because you can imagine how if another chip maker was consolidating their hold on the chip making business by buying Intel's line, it actually puts Apple a little more position of vulnerability to a chip making sector that is smaller. So that would actually represent more of a supply chain risk to Apple. And so maybe that was part of the reason why they made this decision, not just on a cash flow basis, but on a strategic insurance protection or hedging basis. So we could think about the idea of core competencies and benchmarking, as well as vertical and horizontal integration. All of those things being involved inside the Apple corporate boardroom, when it comes to figuring out, do they want to get into that business, and then at what price? How much did the financial analysis of things like ROCE that we just got done talking about in Unit 2, how much of those financial engineering and analytics were involved in this decision? How much of it was an intuitive decision that they made to protect themselves in the supply chain, or do they really see that as a test of expanding into other lines of hardware? Is this really just an exposure to a pretty tightly controlled element of the manufacturing chain? Could this end up signaling Apple becoming a force in the merger and acquisition space, where they're going to start trying to bring in-house more of their manufacturing, and maybe put them at less risk to discussions of social responsibility when they're buying hardware off of countries that take shortcuts when it comes to protecting their people or the environment. So maybe this is a way for them to begin leveraging corporate citizenship and under more direct control of the manufacturing environment. So all of those things are concepts or theories or elements that could be a part of the practical decision that Apple made to buy that part of the business. So that might be something you think about as you start writing the different pieces of the Unit 3 assignments. So the second thing that was in the news that caught my attention this week was a little venture startup company called Beyond Meat. They just had a successful IPO, or an initial public offering. So they just went public and at $25 a share, and now that company is trading at $250 a share. So it's already a 10-bagger. You know, if you bought at the IPO, you've made 10 times the money that you initially risked on the IPO. So on that measure alone, there seems to be quite a market for their ideas and anticipated stream of future earnings. Now, they're not making any money yet. They're actually losing money per share right now, but they are an early mover in that vegetarian meat simulation products, and so people are buying the potential for future earnings by getting an early mover advantage, right? So there's a couple ways that we could look at that. The fundamentals of the company are that they have pretty advanced techniques for creating vegan products that are non-GMO, gluten-free, which taste like meat. And so they've always been kind of a specialty product maker, and they're postured in kind of hippie or yuppie upscale markets like Whole Foods. But just this week, as part of a demonstration that they could scale their business into more industrial food delivery, they have signed a deal with Dunkin', which used to be Dunkin' Donuts, to begin providing breakfast sandwiches that use the Beyond Meat product. And so Dunkin' is looking to get beyond delivering just donuts, and they're trying to get more wholesome foods and a wider variety of offerings. So there seems like a natural partnership between Beyond Meat and Dunkin' Donuts. So in both of these cases, you could see them taking a venture in this partnership to begin expanding each of their own lines of business. And so the advantage to Dunkin' is if they can show that they can provide the demand, if they can meet the demand of Dunkin's supply chain, then they can demonstrate that they are an industrial force and that they can scale to meet other businesses. You could imagine if they got into like International House of Pancakes or McDonald's breakfast sandwiches, or Tim Hortons up in Canada. Now suddenly they move from a boutique company to an actual player in what could be as much as a $500 billion market for vegetarian meat substitutes. So if you evaluate them individually as a company, you might be saying, well, that's interesting, and you could be thinking about their scale and viral marketing potential. But you might also be looking at them as through the lens of a corporate takeover artist. That might be a candidate where somebody like McDonald's says, you know what, we just want to get into that business anyway. We'll just buy the business with our surplus plus of cash. McDonald's has is at an all-time high stock price, so they could use some of the cash value of that very highly valued stock, sell some of that as a way to buy out that company, and then just absorb them through an acquisition rather than merging or through an alliance. So companies like McDonald's and whatnot are facing the same kind of decisions that Apple faces. Apple made the decision to buy the chip making business from Intel. McDonald's might be looking at this to see how well these guys scale with Dunkin', and then they may just decide to step in and buy the whole business and then get some of their marketing leverage. They already have the distribution base, so that might be something that they want to get into early before the price goes up any further. Or you might say, no, what about the inherent risk of a kind of a nouveau fad company potentially that is selling meat substitutes that cost more than meat? So maybe that's vulnerable to downturns in the market. So right now the economy is strong, but you can imagine how in a couple of years that could be not the case. And so maybe the market for that kind of higher priced meat substitute might be seen as a fad, and now suddenly, if you bought them at the current price, you could see that stock price, get cut by 80% in a matter of 6 months. So inherently, that early stage in the business life cycle represents an inherent risk for ownership or for partnering. Like, you don't want to commit to those guys as a supply chain provider and then discover they can't scale and they can't run, and then you're left holding the bag and you've made promises to your clients that you can't follow through on. So Beyond Meat offers some insights in the world of both strategy and tactics and asset allocation and risk management, business life cycling, how to adopt different time frames to evaluate the potential of the company. Like, they've only had 2 earnings calls. The first one demonstrated that they were a serious company that understood how to talk to stakeholder and shareholder concerns. The second one began with them announcing their new corporate partnership with Dunkin'. So now they're demonstrating that they have the managerial skills and the CEO skills to be able to operate like a real live company, and so that should allay some of the fears that these guys are not serious contenders for corporate expansion. So that's the ideas behind Beyond Meat that analysts and supply chain managers and business value analysts might consider when it comes to developing a strategic plan, either to go into partnership with them, to become a competitor to them, to view them as a merger or acquisition candidate, or as an asset allocator and trying to figure out where to put your portfolio dollars. They might be an appropriate way to get maybe the more speculative or higher risk component of your portfolio some exposure in a company that seems to be well positioned for what could be a multi-decade expanding marketplace. So that's the ideas behind Beyond Meat. So I noticed that Alexander has just come in. So let me pause right there and just remind you, if you have any questions or concerns so far, Alexander, go ahead and just dump them in the chat. Otherwise, I'm going to continue to drive on with these prepared remarks. But I welcome you and thanks for your attendance. The third scenario that is coming to mind is taking a look at blockchain technology in the form of Bitcoin. So this is a cyber currency that is based on an unbreakable, they say, technology that provides accountability and transparency of the underlying value, and is potentially revolutionary with respect to how currencies are operating. It doesn't have a particular government backing. It's not anchored in any it's not representing a real asset like gold is an actual asset that has economic value that's intrinsic to it. Bitcoin is simply an agreement, a documented agreement to pay at the current market value of the Bitcoin. So it has a economic value that's tied to the opinions of people about its validity as a store of value. So it is inherently trickier than other currencies, but it does offer some portability and transparency and anonymity when it comes to financial transactions. It makes it a very attractive way to conduct private party payments. But because it doesn't have governmental backing and it's not anchored in a commodity or a piece of real property, it has some aspects of a speculative asset class, and that's one of the reasons why that the value of a Bitcoin has had such wild fluctuations, where you could buy a Bitcoin for $25 a number of years ago. It went as high as $20,000 last year. It dropped all the way back down to $3,000 this year and is now back up to $10,000. So it's an example of an asset that has various different ways to judge its true fair value. It can be used in many different ways for transactions, but it also can be used as a speculative asset. There are Bitcoin millionaires out there. So it offers some following considerations that you could look at it as a business, that the guys who created Bitcoin can then create businesses to make Bitcoins through mining and computer operations, although that's quickly becoming beyond the ability of most people to afford. It could be a business in the sense that you could sell shovels to miners by creating a business that is a Bitcoin or other cyber currency trading exchange. So I had an opportunity late last year with a programmer friend of mine who was in on the ground floor on a technology company that was creating a cyber currency brokerage house, that they were going to open a digital currency exchange, and that was a business. And then as a result of providing that service as a clearinghouse for people that wanted to buy and sell different currencies, different cyber currencies, they would make money off the transactions. And so had an opportunity to consider investing in that as a business. So the creation of Bitcoin, the thing, this new piece of technology that has the potential to revolutionize finance, also generates new business opportunities that were simply not available 20 years ago. So one of the things that happens in markets is that the introduction of new ideas creates opportunities for value that have never been seen before at all. So like when railroads came along, there were whole new lines of business that were simply not in existence until the reality of railroads and the ability to expand them, exploit them, and to serve them came along. So we could think of that as a business in and of itself. You can think of it as a business person. You have to consider your options about accepting Bitcoin as a form of payment or not, because with the stroke of a pen, countries could pass legislation that forbids the use of Bitcoin as legal tender inside that country. So they could actually prohibit you from using it as a source of payment. So if you had built up some Bitcoin currencies as part of your operating capital, looking to hold on to that, maybe, for example, in my consulting business, I had the opportunity to receive payment from a guy who wanted to pay me in Bitcoins, and I had to make a decision about whether or not to accept Bitcoin for the services I was providing him, knowing that there was a potential for amazing appreciation of each Bitcoin. So he might pay me in the equivalent number of Bitcoins to be, let's say I was going to charge him an annual consulting fee of $3,000. There was a time when, even as early as last year, he could have paid me with one whole Bitcoin currently valued at $3,000. If I had accepted that, that would have been a decision to expose myself to currency volatility, because that thing could have gone to $500. It could have gone out of business. It could have been ruled as non-legal tender in the United States, and I would be left with essentially no value, would have lost the entire value of that $3,000 payment. But at the same time, there was a potential for that thing as a Bitcoin itself to appreciate up to $20,000. Well, it actually did that. It went up to 20,000, came all the way back to 3, and is now around 10. So a business's decision to accept certain forms of payment carries with it some amount of volatility based on the nature of the payment form itself. So you have to have a policy for that. You have to have a plan for that. You might need a strategy. So if I wanted to expose myself to that kind of potential gains and losses, I could have made a decision to accept that payment in that transaction sort of as a test case to see how it went. And it would have required me to develop some infrastructure to be able to accept Bitcoin, to create a wallet, to create an account at a discount. I would have had to learn the business of how to buy and sell them, how fast I could liquidate them, so I could figure out what my real exposure was to accepting payments in Bitcoin. So the second part of it is, now if I have accepted Bitcoin, then I have to consider, was it just as a form of convenient payment for that client, and then I want to quickly turn it into regular digital dollars so sell that Bitcoin as quickly as I can for the current value? Or should I make a decision to hold on to it as a capital investment or a speculative investment, the same way that I might accept payment instead of cash? I might accept payment in the form of maybe a half acre of ground that someday in the future might appreciate if it gets developed, but otherwise may not have a lot of value intrinsically. So a decision to accept payment in the form of land rather than cash is a part of a asset class or portfolio management consideration that can be part of my strategy. Finally, there is a political dimension of Bitcoin, in the sense that I'm now exposed to political pressures or political risk, because countries have to develop their own legislative policies with respect to Bitcoin. Are they going to allow essentially a private currency that's not regulated by banks or through national legislation or policies like the Fed? Are they willing to allow that to become part of the economic environment, which actually reduces the ability of a nation to govern their own financial conditions? More of the valuation schemes are in the hands of private individuals, which takes power away from the national government. So there's almost a survival instinct that's going to drive some countries to consider restrictions on the use of Bitcoin as a form of legal tender. So that's now got to be part of my business decision on how to answer those previous questions I made about Bitcoin, because now I'm exposed to political risk and uncertainty, and I need a sub-strategy to handle that. The fourth thing in the news, and it's been in for a while, is the consideration of Mexico as an asset class. We just got done talking about Bitcoin as an asset class. I can actually think of Mexico and their economy as an asset class itself. So Mexico, you can buy an exchange-traded fund or futures contracts that track the value of the Mexican stock market, and in a very liquid instrument. So I can get exposure to the Mexican economy through a single exchange-traded fund, and then hedge against changes in the U.S. dollar Mexican peso currency relationship. When Donald Trump got elected president in 2016 against some long odds, now suddenly on the night that he won, people had to completely reevaluate their posture with respect to Mexico as a part of their portfolio. What were Trump's? Well, we knew what Trump's rhetoric was during the elections. How it was going to make life difficult for him, but was that going to translate into action? How did people suddenly revise their estimates of the value of ownership of Mexican companies or exposure to the Mexican peso or to Mexican contracts. Now suddenly they had to make an estimate of what they thought other people were going to do with their valuation. So it's not just what you think it's worth, but it's what you think other people are going to value at it, and what that their likely moves are going to be in marketplaces in relatively short order. So what we saw was that Mexico became a much more liquid and a much more volatile asset class in terms of just actually trading. So it's been a very lucrative trade in both directions, going both long and both short, depending on the business cycle and the political cycle. And then you can count on Mexico getting back into the news every time Trump feels a need to tweet about the wall in order to divert attention from any other issue of the moment that's uncomfortable. He can shift attention back to Mexico and the kind of the economic and political war that we have on our southern border. Well, that makes Mexico as an asset class suddenly very interesting for shorter term traders or who have skills in riding short term violent swings when the combination or the balance between fear and greed shifts and people dramatically reevaluate Mexico as an asset class. So if I'm an asset manager, if I'm a business that is looking to do international global trade in the North American trade area, now suddenly with NAFTA being on the table or the possibility of tariffs and trade wars and currency wars, now suddenly I've got to be concerned about how the political landscape that changed in 2016 is affecting the assumptions that I made in my strategic plan. So I might have to go back and take a look at what kind of exposure do we have to Mexico as an asset class or as a trading partner or as an operating environment or as a currency risk. And then what assumptions did we make when we made the decisions about how to act? And do we have to revise those estimates and those assumptions based on Trump's being voted in, and then based on our continuing assessment of his actual behavior in terms of policies with Mexico? Is he following through as his rhetoric, or is he all bark and no bite? So you can see that environmental conditions that are beyond our control, which can be quite surprising, can have a direct impact on the way we revise our strategic estimates, and then it may cause us to actually make adjustments to our organizational alignment. Like if you were trying to leverage made in the USA and trying to play to the patriotic fervor, it might make sense for you to change your posture with trade with Mexico and maybe reduce your exposure to those markets in order to play the U.S. patriotic card. So you can see now in items 3 and 4 how political considerations and news events can cause us to rapidly revise our estimate of what's good strategy or not. So that leads me to into the next section where we talk about mental models and just some things I want to just aware you of. There's a really good website out there called Farnham Street, which is a strategic analyst who is fond of the thinking of Charlie Munger, who is the analytical engine of Berkshire Hathaway. He's Warren Buffett's partner. And Charlie Munger he's in his 90s and is just still sharp as a tack, and he has what he calls his 101 mental models that he believes all educated people should be familiar with and know how to use. So the Farnham Street it started off as a blog site, is now in the business of kind of discussing those and popularizing those and acting as a clearinghouse for the application of Charlie Munger's 101 mental models. Each one of those things is a theory, it's a model, it has recommendations for action, and it provides a certain perspective on how the world works. It acts as a shorthand to allow you to decide what to do. And that's one of the powers of mental models. Well, you can also go to 12manage.com and find hundreds of mental models that are dealing with business and strategy and management and leadership and all that, with more direct payoff for managers and leaders. In every case, when you're using one of these mental models, you've got to be concerned about the difference between the map and the territory, that we want to make sure that we don't confuse the map with the territory. Although the map is a simplification of the territory that allows us to act in a risk-adjusted way, it's not the same as the territory that they're simplifying assumptions that we make. So there is an actual qualitative and quantitative difference between the goodness of the map and the reality of the territory. And that highlights the very strengths and weaknesses of mental models themselves. That is, that they are ways of managing complexity to making it simpler so that we can decide on effective strategies and then figure out how to apply those things in the world. But the very strength also becomes its own weakness, that every one of those mental models, every one of those pieces of theory are built on underlying assumptions and conclusions that may be vulnerable to changes in the state of nature, that when the world changes and the world changes, that some of those mental models that used to work are no longer valid. We may have to have a revision to those underlying assumptions. That leads you into the strengths and weaknesses, therefore, of mental models. And so one of the approaches that you see in the modern literature, especially in the book The Model Thinker by Scott Page from University of Michigan, published in November 2018, available on Amazon, he talks about the importance of assembling a portfolio or a system of systems, a model of models that allows you to take the strengths of particular models to offset the weaknesses of other models. And by taking the union of, or the intersection of, these various mutually supporting models, you can build a more robust and deeper and nuanced view of the world in order to come up with better strategy and to come up with better implementation plans. So he talks about that in his book, The Model Thinker. Well, this is kind of important when you look at some other phenomenons like the age of big data and super crunching, where because of the cheapness and the power of computing, new ways of analyzing strategies are available to us that were no longer, or were never ever available before. That whereas before we had to trust to human intuition and simplifying assumptions, with the power of modern computers and the availability of big data, now suddenly we can add a level of rigor to our analysis of scenarios and contingency planning that wasn't available in previous generations, which causes the possibility of a complete reinvention of the art and science of management itself. That when you have access to that much computing power, that you can now start getting more confidence in the consequences of different policy decisions. And so the whole area of machine learning and super crunching and big data now opens up a world to the potential for exploitation by quantitative forecasting and decision making. So that's why things like AI and genetic engineering or genetic algorithms and machine learning all are very important in the cutting edge world of management theory. So you might consider that as you look at some of the more traditional models that we're going to explore from our textbook, which is a nice job of summarizing the conservative time-tested models, but may need some additional work on some of these more speculative or emergent ideas. We can think of a strategic posture towards adaptation as being a revolution versus an evolutionary choice. So revolution, where you make big bold steps, as I described in that Harvard Business Review model in previous lectures, or an evolutionary approach, something like the Toyota production system, where quality circles allow us to make incremental changes that are decentralized into centers of excellence inside your business, and let the people doing the work take charge of making those sensible evolutionary changes. And so Toyota actually combines both of those in their production system, where they every 4 years completely redesign all of their cars, and then in the interval, years 2, 3, and 4, all they're looking to do is evolutionary change by using quality circles and detailed feedback to make micro improvements to the existing products, while the designers are in the business of completely redesigning every 4 years. So that harmonious mixture of both revolution and evolution, in my view, is the real essence of the unique value add proposition of Toyota. We can think of planning and organizational alignment as the difference between, or the synthesis of, both strategy and tactics. So if you think about the day-to-day business as tactics and the strategy as the grand visioning, you can realize that there is a need for a connective tissue, connective transmission between strategy, converting it into a specific daily tactic. So that led to the rise in military planning of what we call operational thinking. That's the ways that connect the ends and the means. Between the strategic vision and intention and purpose, strategic thinking, and the world of tactical possibilities and limitations based on resources. So the arrangement of people and equipment and units and missions in time and space to achieve our goals, that's what campaign planning is about. That's what operational planning is about. That's the connection between theory and practice in the world. So you're seeing more and more businesses and think tanks talking about developing those skill sets that allow us to organize our daily activities in such a way that it builds towards our strategic visions, or it allows us to convert the strategic visions that came out of our brainstorming and puts it into meaningful projects that lead us to effective tactics that allow us to get better each and every day. So that strategy, operations, and tactics is a mental model that you might adopt when it comes to analyzing companies in Unit 3. You might adopt the ends, ways, and means mental model as a way of systematically and in a disciplined way analyzing your targets, your companies. You might consider the model of VUCA that came out of U.S. Army War College back in the 90s, which describes the world environment in terms of four qualities that are increasing all the time in their view. Volatility, which is the rate of change day to day, is increasing, so the magnitude of change is greater and the pace of change is greater, so you're getting more and bigger changes all the time. The waves are getting larger. The U is uncertainty, and that is just the lack of particular knowledge, the inability to define probabilities and detailed outcomes. That's what we mean by uncertainty, and that causes us to have to consider how to hedge against unfavorable outcomes and try to estimate probabilities of failure in order to decide how much insurance we need to cover the risks that we're willing to take. So that becomes a certain skill. It's the opposite of certainty. Complexity theory gets us into a study of how even simple things, if you have enough of them, combine in ways that go beyond the ability to compute. Now the the super crunchers and the big data people will tell you, no, that's the size of that computable space is getting larger all the time, so they think they're advancing on that frontier, whereas other people say, look, the world has entire categories of complex problems that go beyond the ability to ever model with granularity or fidelity. So taking a look at complexity then is certainly an issue for how to design a strategy that accounts for that complexity that you've observed in your sector or in your world. Ambiguity is then the case where we have multiple competing explanations for the same sets of data. It's related to uncertainty, but what it really says is that we can't rely on the stable sense that we make from a particular analysis, that it could be vulnerable to multiple meanings to multiple people, and that there may not be just one correct way to evaluate a situation. When you start looking at sociology and culture and political realities, that is certainly one of the key elements of that environment, because people from different cultures and political traditions will establish mutually exclusive sense-making judgments about a particular act, and so you got to be able to account for those competing frames of reference. So if the world is experiencing more VUCA, V-U-C-A, then we've got to develop strategic plans that account for that increasing volatility, uncertainty, complexity, and ambiguity. So that website there, thevucaworld.org, is a nice effort at trying to convert what is essentially a military strategic model into commercial applications in some interesting ways. So I offer that to you. The final thing I want to talk about, there are just some definitions of complexity and what we mean by complex systems, and the different ways people who are using or studying that theory are breaking it down in a systematic way. They're a research program. And then closely related to that is the idea of network theory, where we are more than the sum of our parts, that we are, our organizations themselves are really networked organizations that that can be studied, but we're also participating in a systems thinking world in which allies and neutrals and enemies are in this complex interconnected network that can be studied as an object of study. And so you can see that, as I've listed, there are some of the basic ideas about network theory. So you might use either of those as a way to pick a model to talk about the analysis that you're looking at doing in units 3 and beyond. That what I want you to keep emphasizing is pick a model for a particular reason and then apply it in the way which it was designed to demonstrate mastery of tool making or tool using when it comes to management theory and practice. We got to get into that habit. It can't just be our own stream of consciousness or what we think, that we want to be in the business of picking from among professionally validated models and then applying them in the correct manner. That's what people expect of people with our degree or come from our program to be able to do. So this is free chicken. This is your chance to practice actually doing that. Now you can see I've listed under network theory some of the sub elements of it, and if your research for your dissertation takes you into the areas of complexity and network theory, you got a little head start on the kinds of things that your committee is likely to ask you to talk about. How do those elements of complexity theory or network theory actually interface with the questions you're asking and the data you're collecting? How are you accounting for those different domains? And that's what we do in the literature review and in the design of the proposal, is figuring out which pieces of theory we need to use and how we're going to incorporate them into our work. Okay, so that's everything I wanted to cover tonight. Was just an introduction to some different kinds of dynamic scenarios in the real world that would be the subject of actual strategic planning and organizational alignment on behalf of practical-minded CEOs or hedge fund managers or venture capitalists who have to make strategic planning choices and then organizational alignment or realignment decisions in order to be able to achieve those strategic visions. And that's just 4 things that were in the news just this week. So there is a rich and varied world out there just demanding for people with our skill set to come and help them make sense of all this VUCA world. So that's the sense that I wanted to convey to you this weekend. So